Hello traders, this is Orlando for OGFX, and today we're going to have a quick view at the US dollar. Right here we have the US dollar index or DXY. So I'm going to zoom in on the chart. Well, I'm going to make it big for you guys. And right here we have a current price action on the DXY. Now, let's start by saying that this ABCD is not a pattern. It's just there's some annotations on the charts because I'm going to use them later for the Fibonacci retracement levels that I have on my chart right here. So basically, if we zoom in on the DXY, we have been trading up for a while now, since around April 2018, the dollar has been soaring. But as you can see, it has been capped, and right now it is capped by this 97.70 level that we tested once here, tested twice here before we came down and tested this trend line a third time and then a fourth time. Now, let's have a look into today's price action, right? Because we have been soaring, or we have been on a very bullish move throughout the entire month of February 2019, and yesterday we broke with this high on point C at around 96.50 or not 96.60. I'm sorry, and we had a very bullish start of the week. But now we have hit some very important targets. So this is why we have an idea, or the idea, that the US dollar is going to be pulling back. And the reason is that we have hit this base, right? This previous structure high, which was also support at one time. And not only that, it confluences with the 76.4% retracement of the entire move down. That's the 76.4% retracement of the move from A to B. And it is the 127.2% retracement of the C to D move, which is a very strong bullish target, or short-term bullish target. So this means that we might get a pullback, and a pullback before we break with the 97.10 level and test the 97.70 level again. We are still very bullish on the US dollar, and remember that later this week, I think tomorrow, we have the consumer price index coming out of the USA, and the forecast is very good. So this is going to give a bullish bump to the US dollar. But for today's session, we consider a pullback to this previous high around the 96.60 level, maybe, for a continuation to the downside. Now, what does like a pullback for today's session mean? It means that all of you that are long gold are going to get that bullish push that you have been waiting for now for a while, right? Let me just pull up this gold chart, and because gold and the US dollar are inversely correlated, bearish move on the US dollar means that the price of gold is going to be soaring. So on the pre-market, we have noticed that we are capped on the downside by the 1304 level, and on the upside by the 1315 level. If we break with the 1315 level, let me just pull out a 4-hour chart, maybe, so you can actually see the levels that I'm talking about. All right. Now, to the downside, we are capped by the 1330 level, and right here, if you notice, let me just grab this ray. We are capped by the 1315 level that we have tested tremendously in the past. Right here, we tested it, and we couldn't break above, and we came back to test the previous structure high, and then we tested it again on Friday last week. And if we are going to continue this bull run for at least a test of the previous highs at around 1326, we need to break above and close above the 1315 level. And all that is going to be And the catalyst for that bull move in gold is going to be this pullback on the US dollar. So good luck and safe trading on this US session, and I'll see you guys tomorrow.